Welcome to the Truth About Real Estate Investing show for Canadians. My name is Erwin, host of this show since 2016. Over 400 episodes. Anyways, I am 4-time Realtor of the Year to investors in Ontario. 20 plus year Ontario landlord. I have all the gray hair to prove it. We formerly had an 8-figure portfolio. Why formerly? Because we sold nearly half of it because I am selling Ontario to buy somewhere landlord friendly for value and positive cash flow. On this show, I bring you strategies, stories, and experts to help you build your wealth, avoid costly mistakes, such as investing in tenant-friendly places, to reach financial freedom faster in Canada, in the USA, or beyond. Let's get started. Michael Pawnee, old friend of mine, returns to the show for his 4th appearance on the show. And this time, we're diving into how real estate investing has fundamentally changed in his experience, his 24-year experience. He's since founded Savvy Investor. He's a respected Canadian educator in the real estate space. He's built a national portfolio of multifamily properties and mentored thousands of investors across the country. He's got lots of apartment buildings across the country. He's experienced almost every province for investing. So who better to tell you which place is best to invest? And now, this is a little bit controversial. Michael and I agree. We're going to have some people that throw some hate at us. However, the Canadian real estate community is full of CMHC's MLI select missing middle bulls. Bulls as in they believe that is the best way to make money. And they're probably right. Just understand, many people will lose money with the strategy as well. Anyways, I've hosted several of these bulls on this show. They're lovely people. They're friends of mine too. Michael stands out as one of the very lone contrarian voices. Hence, we have him on this show because we do not mind controversy, nor do we censor people. He's questioning the sustainability of over-leveraged development deals and emphasizing the importance of buying right, managing risk, and active real estate investing versus passive, boring real estate investing. There's a difference. His philosophy is rooted in discipline and long-term thinking, values he learned not just in real estate, but also through his journey as a competitive bodybuilder. For those who don't know, again, I've known Michael a long time, where he overcame health challenges and pushed himself to the physical and mental limit. In this episode, we discuss why single family home investing. It used to work, but it doesn't anywhere in Canada. It does in the States. The rise of invasive renovations and development strategies, how Michael identifies and prunes underperforming assets from his portfolio, the parallels between bodybuilding and real estate investing, why boring, cash-flowing multifamily properties still win in his opinion. Michael also shares the details of the upcoming Savvy Investor Summit, a free 2-day virtual conference happening September 13th and 14th this year, 2025, featuring speed networking, an exhibitor hall, and over $10,000 worth of prizes, including a Caribbean cruise for 2 that he promises to be on as well. I need to get more details on this Caribbean cruise because I'd be interested as well. Anyways, you can register at thesavvyinvestor.ca. Again, the website is thesavvyinvestor.ca. On the right side, you'll see details for the conference. Again, it is free thanks to sponsors. Again, it's free. Whether you are new to investing or scaling up, Michael's insights will help you stay grounded, strategic, and resilient in today's ever-shifting market. Once you're done learning how to get rich with Michael, come spend Saturday, September 27th morning with Cherry and I for a half-day workshop on wealth planning. This event will cover essential topics such as financial planning, wills, insurance, and estate planning. Our expert speakers, including Cherry, Chan, and myself, we have one more that we've yet to announce, will share valuable insights to help you secure your financial future. Don't miss this opportunity to enhance your financial knowledge and your network with like-minded individuals. Register by clicking the link in the show notes or in either of our email newsletters. In-person seats always sell out. I promise you that. And we'll sell it even faster as we've invited a lot more people because both Cherry and my audiences are invited. If you're like many and wondering if you have enough to retire or how to retire more comfortably, this is the event for you. We look forward to seeing you there. Please enjoy the show. Hi. Michael, thanks for doing this. What's keeping you busy these days?
Life is busy. I just got myself a brand new puppy. You know, you would think, with a couple 20-year-olds, literally I was an empty nester. I thought, what? We're finally free. We thought we'd complicate our life with the new puppy. And for anybody that knows about a puppy, it's like a brand new baby, to be very frank. And we love him to death. His name is Finley. He is a Brussels Griffin, for anybody that knows. It's the one that's got the big, long beard. He actually those types of dogs look like Ewoks. They were actually like the big fur and everything. So anyway, what's keeping me busy? Puppy is keeping me busy, and sometimes you don't know what you sign up for. But yeah, so anyway, I'm a new papa again, all over. So
Is this your first dog or?
no, we've had well in my immediate family with my kids. This is our second dog. Our dog passed away a few years back, and so my wife was itching for a new puppy, and so we decided let it. I think it was time. Now my daughter's going to university. She's literally going to be moving out officially by the end of this year. So I've got my son, and so we're starting to kind of get half empty nesters. So kind of made the decision that we're going to be ready to be dog grandparents. What is it? Dog grandparents. I can't remember their name, but yeah. So that's keeping me busy. Yeah.
So one theme in my household is that we do hard things. So before we're recording, we're talking about doing hard things. And I don't know if most people know, but you have competed in bodybuilding before.
Yeah, a lot of people don't know. Don't search, folks. Don't search on the web. But yes, I did.
Now, what gave you the idea that you wanted to be a bodybuilder?
You know what?
We're not just talking about going to the gym and getting pumped. We're talking about you were on stage in the small bathing suit and all tanned up and stuff. And
the whole thing.
Posing.
Yeah.
Yeah.
And I wish I had my trophies with me. I don't have it, but I only competed a few times, but I placed in the top 5 for every time I competed. And honestly, there's a big story behind that. Before I started competing, I actually had a lot of health issues. And my doctor said to me that if I don't get myself back into some reasonable shape, just like a lot of us, we ate a little too much good food and all that stuff, that, I'd probably be in a position where getting a heart attack. And so it kind of scared the crap out of me. And so I started working out again and training, and I didn't hire a coach at that point. And then I decided, you know what? I had a friend of mine who was competing, and I wanted to better understand nutrition and health and everything. So I hired her as a coach, and she's like, Mike, if you really want to push yourself out of your comfort zone, then I think you need to compete. And I absolutely said no, because that was not my goal. And then she pushed me further. And then I said, fine, I will do it, right? And I said, if I ever really wanted to get out of my comfort zone, this was going to be it. And that's where I started my journey, actually. And so I started to train and eat, and no drinking or any of that stuff. And I'll tell you, and I was telling Erwin beforehand, it was the hardest experiences. Oh, you bugger. It was the most difficult experiences that I've ever come across, but it was also one of the most rewarding. And yeah, I don't know if anybody's watching this. If you guys are seeing this on YouTube, I guess, or wherever, Facebook.
Yeah, we'll post this on YouTube. I'll link to this. I'll copy it. I'm going to save this and post it in the show notes.
Yeah, post it there. But anyway, you can kind of see me in my training and my shorts and stuff. But, the amount of work and energy and effort. And to be honest, I went into this very different mindset. It was, I didn't really care if I won this competition or placed. And really what I wanted is that I committed to doing the absolute best that I was able to accomplish. And that was this image here. So I did come in 3rd place in this one. Obviously, you can see the guy in the center. He was ripped beyond belief. But anyway, the guy...
For anyone on the YouTube, Michael's on the right.
Yes, correct. In the blue shorts, right? So there we go. But yeah, that's kind of me there as well. So Stacked House, it was pretty fun. I enjoyed every episode, every segment of doing this. But really, really tough. Really, really hard. Lots of very, very tough discipline. And I don't know I can't remember the date. I think it was like November the 2nd. So here we go. So November 2nd, I think, was this competition. And I don't know if anybody remembers what the kind of holiday is just before November 2nd, which was kind of Halloween, right? And treats and candy. And of course, I can't eat any of that. And as a father, we always dip into our kids' candy stash. So I couldn't dip into it. And literally I was craving, I think it was a Snickers bar. My coach was like, okay, go to bed right now, because you can't be even looking at any of this stuff. So it was pretty fun. But well, that's me. So that was competing. So then I kind of did the BCs after that. I qualified for the BCs, competed for that, did that a little bit longer, then I kind of retired. It's a significant discipline. I love working out. I love training. But when you see the images, or if you do see the images here, you think that you're extremely strong. This is actually at my weakest point in training. And so you are very, very weak because you've depleted yourself of just everything. You have literally no water intake in there right now. This image, I've been eating cod 6 times during the day prior to this, and actually almost 3 weeks prior. So think about eating cod, baked cod, no, very little seasoning, no salt, for breakfast, lunch, like 6 meals. So there's a lot of discipline to get to this point. To maintain this is almost impossible. So, sometimes the images don't really tell the truth or the story of this. It's very, very difficult to maintain this type of level. But for a short window, this was a goal of mine. This is something I've always strived to do for myself. And I got pushed, not necessarily to compete, but to be healthier because of, potential ailments. So I was really proud of myself for doing this. So, yeah.
I've heard stories about how difficult this is. Like a friend of mine did bodybuilding, and she was telling me how once they had a nutritionist come and speak to their group, and her takeaway was how similar their eating style was to people with eating disorders.
It's not far from that, to be honest. It's really, really, really hard. And in some cases, I know I might get in trouble for this. It's not all, when you're competing to this type of level, it's definitely not super healthy either. People get some serious issues with it. But again, if you're trying to do this, it's kind of like a once in a moment opportunity. To do this long term is very, very difficult. And you got to be a special person to kind of maintain that. So,
Right.
yeah, it's fun though. Just a chapter of my life, just like many other different chapters. But that was a fun one. So I really enjoyed it.
Like a tip of the iceberg, we see like, oh my God, Michael looks incredible. He's super crazy, successful, and all these things. No one has idea what went into it.
Yes. So there you
Cod
go.
6
So
times
a
a
little
day.
glimpse of my past, right? So, but yeah, it was good. It was fun.
All right. So speaking of hard things and being able to having lasting power, you've been around for a long time and as a real estate investor.
Yeah. Long time. Yeah, it's kind of funny. It's 24 years. And I've known
Uh,
Erwin a long time too, as well. Like, it's kind of funny to, we say how long we've been in the industry for. And when you hear that, we've seen a lot. People come and go, and things and challenges that have happened. And
mhm.
like I said, having discussions like this with you, Erwin, is always great because you kind of reminisce of some of the things that have happened. And at the same
Mhm.
time, you see some things kind of almost come full circle in some ways too,
Mhm.
right? So, yeah.
Come full circle, and I heard the word evolution this morning, and I thought about that. And I don't know, my mind went straight to real estate investing.
Yeah.
Now, just think about the evolution of real estate investing since you started. So that's I think it's a good place to start for the invest for anyone who's listening who doesn't know
Hmm.
who you are. Can we talk about like the evolution, your evolution as a real estate investor?
Sure. Yeah. Like I think for me, and I probably shared this in the previous podcast. Like, um, I'm very honored to be here. Truth about real estate investing for Canadians, and being a part of a podcast, getting some visible presence just in the space. But I had no intention of this at all. Like I don't think many of us did. It's just like getting being kind of recognized in the space. I just wanted to own a couple pieces of real estate. That's all it was. And for me, it was just a couple townhomes that I wanted to own. I wanted to generate a little bit more cash flow to help kind of support my family. I also just wanted to diversify my investments, and I didn't want to put it all into stocks and mutual funds. And I'm not knocking that. It just wasn't my cup of tea. I just found something else a little bit more, uh, I guess, more
Tangible.
tangible, I guess is the best word, right? And that's how it started. And then I kind of got the bug. And then I started to kind of get into townhomes and single family homes, then fourplexes. And then just like the evolution, you start to bringing in money partners to kind of
Hmm.
participate in projects with you. You learn how to properly raise capital, and then you start to look at bigger, better things. And I shouldn't say better things, but
Hmm.
just bigger things. And part of that was part of boredom. In addition, that was just part of trying something different, try new challenges. And just with part of that evolution is all these lessons that come along with it along the way. Um, I don't know if you agree with me. I think the biggest evolution that I've seen in the last 24 years of doing this is what's available to investors today. Like, back then there really wasn't anything, like very few books that were written. Well, obviously you and I were part of RAIN, Real Estate Investment Network, which we were fortunate to connect with each other. But other than that, there was really none of this. Like, it's going to sound really weird. Facebook really didn't exist back then. Okay. Instagram really didn't exist back then. Podcasts, I don't even know if there was really any podcasts that were really based back then. I just don't think there was a lot of that information. YouTube. So, I think that's been the biggest change, is the accessibility of information to help people get to learn has been absolutely huge. And with that being said, you can learn so many different things and techniques and strategies. And one of the things I love to share is learning from people's experiences. So, even in my time frame, how I've evolved from just kind of being just an investor, working a full-time job and doing this as a side hustle, to becoming a full-time real estate investor, educator, and now with our other company called Savvy Investor, trying to create a platform to help support our industry. That's been kind of the evolution, but it's been amazing to see how everything's transitioned. And part of that evolution is all the changes that come along with this. And that was a real big eye-opener for me, is real estate investing is a living, breathing kind of entity. And when I say that is the cycles, when you're in it as long as I've been in it, I've ridden 3-4 cycles and seeing kind of a pattern that's occurring, where for a lot of people, especially right now, this is their first cycle and they're just like, it's kind of feeling like they got hit over the head, a shock of this. But we've seen some of these things. Policy changes and rules changes from banks. CMHC is a perfect example. I think we were talking about that earlier. It's just like CMHC with their policy changes. What you think your exit strategy is can also change in a blink of an eye because of a policy change or a rule change or a change in the market. And at the same time, I think the biggest thing that I've noticed as part of the changes that have occurred is government intervention as well. And I think we shared about this a little bit in our last podcast interview, is how governments are trying to obviously be much more involved in our business, and it's also impacting us as well. So for us as real estate investors, even though some good, some bad, like, I'm not trying to knock it. I think it's just kind of that balance. And so, but I think we have to just be aware of everything. Like, it's constantly changing, adjusting, pivoting. So you just need to be aware that as you continue to grow and evolve, so does the industry as well. And I've seen it, back in the days, interest rates, 5.6%. And in that, at that point, that was still a really good deal. But for a lot of people, they think that's really, really expensive today. And really, that's what we're seeing for interest rates right now is great. That this is a good interest rate. So like I said, there's always these ebbs and flows that are happening. And so for me as a real estate investor, I've been really honored and privileged to be able to do this for as long as I have. And trust me, I've got the bumps and bruises and the gray hair to show it, because I've been through some of the tough, learned from those lessons in many different investment strategies. But that's all helped me become a much more effective real estate investor today. And I think that's the one thing that everybody needs to understand, is you're always a student in this game. Always. You're always learning. Even for myself, there's lessons being learned constantly each and every single day. And as soon as you think you figured it all out, that's when you get hit over the head in some cases, when some things change, and you just need to be aware. I've also been that person of ego, where buying the wrong property because I just wanted to own more doors, and feel the pain points of that too as well. But again, those are lessons that have been learned throughout this whole process. So like I said, it's been an amazing journey, a lot of fun. I'm enjoying it now, much more now, because in this space, and I'm not sure if you can agree with this or not, is time kind of heals a lot of wounds, and over time things have just really improved. We're generating more cash flow than we've ever seen before, just because a lot of the mortgages are paid off, or that we have very little. Rents have gone up drastically in a lot of the markets we're investing in. If we have a mortgage, the mortgages have come down so drastically. So we're now kind of sitting in a really wonderful place, and so it's great. And like I said, time does kind of heal a lot of the wounds in this business, and. But again, up to this point, like I said, there's a lot of lessons that have been learned along the way.
Now, Michael, that's a mouthful. Thank you. Uh, One of the lessons. Now, I always like to talk to the new investor, and not just the new investor. I always like to talk to like what's next in terms of like what's the next thing that you're going to invest in. Now, for context, can we rewind it back to the townhouse, the first few townhouses you bought? Could you share what year, what you paid for them, what the rent would have been roughly?
Yeah, I can definitely share that. I always joke around. I call this one my brown little turd because that's what it really looked like. It was just ugly as sin. I paid $78,000 for a 3 bedroom, 1.5 bath townhome, finished basement. Okay. And the rent for that was $850 a month for that.
Well, those are good numbers.
They were good numbers. Okay. But even at that time, and I still remember this clearly, is that property was negative cash flow, $40 a month. Okay. But with that being said, I accepted that because I'm just like, that's just one lunch I'm just not going to eat a month. Big deal. Like what's the big, because at the end of the day, the mortgage is still being paid off by the tenants. And honestly, I didn't even really know what cash flow was back then. You know, there was not a lot of clarity to what the hell I was kind of doing, to be very honest with you.
Available out there.
I just didn't know.
Right.
And, but it was literally the year after, you know, the rent kind of jumped up almost 20%, 30%, where that negative cash flowing property turned into a positive cash flowing property. And then the light bulb kind of came on. And then all of a sudden the rents went up again back in at that time. You know, just kept going up and up and up. Now I was making $400, $500, $600 a month cash flow out of this. And I'm like, now we're cooking a little bit. This is great because my investment was, 20% down. It's like $25,000. There's really nothing to it. Mm-hmm. And like a lot of people, we dipped into our line of credit to kind of get started. And when we were starting to see those numbers come in, I'm like, hey, you know what? If I buy more of these properties, I could probably help start to offset my income. And that's where the light bulb kind of came on. And so those first 4, 5, 6 properties were all single family townhomes. Price points at that point were, like I said, around $74,000, $75,000, $76,000 to about $112,000, somewhere in that vicinity. The market started to appreciate during that time, but rents were also kind of managing through that as well. And then it was shortly after where we were in a really good solid position where we're generating some very, very decent cash flow out of the properties. And so those are kind of my first experiences. And part of that experience was learning how to build your team, finding a property manager, all of that stuff that came along with it too, right? So,
sorry, Michael, did you mention what the year and city was?
Sorry, it was Edmonton. First property was in Edmonton. And just for context, I'm based in Vancouver, for those that don't know. And the reason why I went there is part of my learnings was in Vancouver was just too expensive. I just found out there was no, I was going to lose money every single month. And our mutual friend, Russell Westcott, who you all know, or some of you know, who was a colleague of both Erwin and myself in the community space, he started to buy there. And for him, we actually worked for the same company together. So when I found out he was investing in Edmonton, I started to do some digging there, and I kind of followed on his footsteps about that particular market, and I bought there too. Different team members, different people that we worked with, and then even just the strategy was slightly different. But at the end of the day, that's the reason why I went. So it started 2001, and then we bought 2001 to 2003 to 2003, 2004. We bought about 5 properties around that time frame for that time period.
Now, fast forward today, what would those prices and rents be?
Property prices, you're going to be just looking under $300,000 right now. So for the townhomes, rents, you're looking at 1825, somewhere in that area for rent. So it's still pretty reasonable compared to like places like Vancouver and Toronto. Right. But we're seeing significant rent increases. And so even just up to about a year and a half ago, those same properties were renting for $1,400. So in the last 2 years, we've seen some pretty big jumps in rents.
And do you still hold them?
Yeah, I still do. I call them my little piggy banks, to be honest with you. Yeah. So these are ones, I've got one for my son. I've got one for my daughter, and I call them their little kind of piggy banks. So when the time comes, they're ready to buy their first properties or whatever. Really, there's no mortgage on those properties anymore. And these things are just kind of cash flowing like pigs, to be honest with you. And it's just kind of one of those ones. It's not, because we hold such a big portfolio, I'm happy just to let those things just produce accordingly, to be honest with you. Because I look at like my kids, like my daughter's going to university. Technically, that one property is paying for her university, and my son, he's going to university too. The same thing. That property is paying for his university as well. So these are great little assets that are being held, which will be transitioned over to them over time when it's their turn. So.
Now you teach investing, but I think anyone can just run the numbers. Like the rents did not keep up the price appreciation. So at least surface value, I don't own them like you do, but the numbers aren't nearly as attractive as they were back then. And
you mean for the rent you're talking about?
Yeah,
Oh, you mean for today's value? You're right, 100%. 100%. Like, I think that's where you're starting to find.
Like you invest all over the country. Like this is.
I do.
And kind of what I'm trying to get to is the opportunities have. Not many opportunities have gotten better. Actually, pretty much all opportunities have generally gotten worse.
Yeah, for sure. Like, I think, in this day and age, you're talking about from a cash flow perspective in the acquisition today, right? And you're right. You're 100%. It's affordability. It's all of those things. Prices have gone up drastically. It's kind of the same thing we saw in Toronto. When we saw markets appreciating like crazy, there was limitation to how much you were able to raise the rents. Obviously, things start to get a little bit offset. And that's kind of happens in a lot of markets. When you're seeing such significant growth in like places like in Edmonton, obviously prices are going up. Now, what I'm sharing with you are prices based on the properties that we currently own. There are properties that are cheaper at $250, $245, at $1,800 a month rent as well. You can kind of get that depending on the location that you're in. But to your point is, they're not cash flowing like they once were back in the days. Things change. The markets have changed. Demand has changed. And so that's where you have to take those things into consideration. Like even for myself, I don't necessarily invest in townhomes anymore. That's not my strategy anymore. But that's how I first kind of got started. Just got my feet wet just to kind of learn the process. And now for me, I've evolved to kind of more multifamily properties, and obviously valuation increases and finding motivation. And that's kind of been our strategy for several years since then. And so with the way the properties are performing today, like they're still generating cash flow with no mortgage. So they're generating great income in this space. But like I said, it's a little bit nostalgic for me because these are some of my first few initial assets. And so, like I said, it's one of those things that I know that I can pass along to my kids as part of a legacy that I want to give to them. So.
Now, I started this question with the word evolution. Now, what I want to paint for the listener, for example, is like, your parents' generation, my parents' generation. My parents didn't have any money, so when they were young. So, but what I'm trying to get to is like a townhome in Vancouver was much more reasonably priced for your parents' generation.
100%.
Right? They got priced out. You got priced out. Hence, you were buying in Edmonton.
Yeah.
But again, this is kind of, and then you couldn't keep doing with that model. You invest in apartment buildings, and you keep looking for partly more affordable opportunities in different areas, and this is like the evolution of the investor. No different than my own journey, my client's journey. We started in single family because you could cash flow break even, and then the natural evolution was like small multis, and then all this basement conversions, and then. And then all these things cash flowed anymore. So all these people are doing Airbnb, and then the cities cracked down, no more Airbnb.
Yep.
And now we're at the point of a lot of development, right? We went, like, you and I come from a school of like keep your investing boring.
Totally.
And
I still believe
the
in that.
current school of thought is, like, you correct me if I'm wrong, it's just what I keep seeing from people is there's almost no discussion of boring anymore. It's largely about invasive renovations. So either suiting or garden suiting. Like to me, that's an invasive renovation, right?
It is.
Lots of permits, zoning changes, development charges, and even to the next level, we're talking about developments.
Yeah.
Like building 5-plexes, 6-plexes and above.
Seeing a lot of that.
Now, so kind of the first question that AI came up with for you was, how has investing strategy evolved in the last 12 to 18 months, and what's driving those changes?
It's a great question, and it's going to be kind of a boring one because I'm still in the old school train of thought at keeping my life and keeping my investing boring. And it's proven well for me all these years. And again, I'm not knocking the development side. I see people doing exceptionally well with this. It's just not my strategy. It isn't. And so for me, I'm okay with renovations for increasing valuations and multis. And I know for a lot of people that I teach, it's the same kind of principle here. But am I looking to put a garden suite or a bigger development with new zoning or any of those things? That's just not really for me. That's just not it. I'm happy to kind of convert suites within the building in itself. Sometimes we're looking at one of the things that we tend to look at caretaker suites, which is just really an office, and converting those to bachelors and expanding that and making the look of the property much better. Maybe there's some of these older properties that we own. We have some very, very large 1-bedroom units that can very easily be converted to 2-bedroom units. So those aren't really big adjustments that need to be made, but can really push the value add in there. So for me, my strategy as part of the evolution, it's similar to what you said, is like I started with single family, and single family worked reasonably well. But what I tended to find as well is the amount of work and energy that took to do that single family, and what I was able to do with bigger projects like a multifamily was kind of the same. It's the same unit. Like obviously there's more tenants involved, but it's the same building. And so you're getting the economies of scale. And that was one of the big lessons that I've learned is, obviously economy of scale, obviously with leverage, looking at other functionality, other opportunities to increasing value other than just be so dependent on the market. And that was a huge eye opener for me, is even in a down market, you're able to increase values like in multifamily just by increasing net operating income. And that to me was really a real clean strategy for me. It's really cut. It's black and white. If I increase that dollar of net operating income, I'm increasing the value of that property between $15 to $16. That's the game. Where in a single family property, it became a little more difficult because it is very market dependent. Obviously, we can do renovations and increasing value, but it's still very, very market dependent on this thing. Mm-hmm. So that's part of that evolution that I've learned is like, as I had to go through cycles of challenge, where rents had to go down in situations of negative cash flow, and even loss of equity in some of these deals as well. It opened my eyes to saying, there's got to be a little bit of a better way or a different way to facilitate that. Now, to go back to kind of where you're talking about development and all of those things, I give full kudos to people that wanted to do that, but that's just not in my wheelhouse. Like I said, it's not, there's an interest to it. I love it. I could see the benefit, but I also see the amount of work. And I think we were joking around before that we tend to be a little bit lazy investors, and I'm happy with that. I enjoy that. I like to keep my life really, really simple. And once you find a strategy that works specifically for you and it's consistent and is paying dividends and you've got clarity to this, you've got your team in place, then it makes it really, really simple. So to kind of change course when you're looking at something that is working, for me, that's not something that I'm looking at. Like for me, when I look at short-term rentals, Airbnbs, you can see the money that can be generated, but you know what always came to me is, God, that's a lot of work. And then the other part is, I suck at design. That's not really my wheelhouse, and I just can't imagine being that involved in the business. Mm-hmm. And so for me, it just really wasn't for me. And so that's one of the things that I've stayed with, is this staying true to kind of where my interest was and where my focus was. And for a lot of people, they may say, well, this is not as exciting or anything like that. I don't really want it to be exciting. I want it to be really stable and really consistent, and understanding what my true net objective was. When I came to this investing world, spending more time with my kids, my family, and just having more freedom in my life. And I just find, and again, this is just my own personal opinion, there's a lot more involvement that comes into like that development side, which I just really didn't have a lot of interest in. So
something that I was chatting with you about off camera was about value investing, right? So, for example, my friend who builds, again, I'm not a CMHC MLI Select development expert, so I've had guests on to talk about the subject, but personally, I don't. It's not for me.
Yeah, me too.
It starts from a value-based investing standpoint. Like the numbers I gave you, for example, like I've spoken to quite a few builders, their own building costs. There's always a range, but the number that keeps coming up is $240 per square foot is their own cost to build. They already own the land. This isn't soft cost. This is just the building cost, right? Versus like we're buying for $116 to $122 per square foot. existing houses on land in the States.
Yeah.
And also, traditionally buying resale property, even resale apartment buildings, I'm going to guess is much more reasonable cost per square foot than a new development. So then where is the value in the investment? If you remove the CMHC MLS Select, I'm going to guess it's not there. Like, how do you feel about all this?
Yeah, I'm not a big believer in the CMHC. I see some of these developments, and again, sorry, I'm not trying to knock any of this. It's just about being visible and being clear with this. Especially, I see some of these development projects, their price points are just through the roof. And again, to your point, how do you increase value when you're at its highest level at that point? And people get kind of caught up in the shiny stuff, like the brand spanking new developments. So people buy and invest into that space, and they're just like, well, I'm going to have less trouble, less issues, or any of those things. And that's all fine and dandy, and that's wonderful. But when you start to break down the numbers, and if the only way to make this deal work for you is by working with CMHC MLI Select program, that's a little nerve-wracking to me, because at the same time, you are at leverage at its kind of highest points. You're hearing the same thing, 5% down, 95% financing, amortized at 50 years. And in a lot of cases, these things are, barely cash flowing, or they're just making a little bit, but they're attractive because the low investment is in place. But we've seen this story before, is what happens if the market changes or it shifts or adjusts, and then all of a sudden that property kind of tends to be underwater. So I guess you just got to be really, really careful. For me as an investor, I'm a big believer, and some people may oppose to this, and I'm okay with that, is you make your money on the buy when it comes to real estate investing. So I look for those deals. I look for those opportunities. Mm-hmm. And I'm not looking for always the shiny property. I'm looking for the opportunity where I can turn it into a shiny property and make it look nice and improve the tenant profile and everything. Truthfully, those are where the opportunities are. And when I see some of these newer projects and newer developments at these higher price points, and again, I might get knocked on this, and I'm okay with that, totally fine. But when I see some of these new development costs and I see investors buying into these newer projects, you got to really ask yourself, what's the end game here? What's the opportunity in this type of an investment or deal? And understanding the exit strategy. When you're looking at this deal, if the market takes a shift, which we've all seen happen, if the market drops 5 or 10%, how does that impact your project? If interest rates go up, which we did see not that long ago, 1%, 2%, how does this impact your project? So having some clarity to kind of understanding, if you have to pivot and adjust your exit strategy, do you have those cards to facilitate that? And in a lot of cases, I see a lot of these things at such a high priced over leverage situation, it puts people in kind of an awkward position. So I'm very cautious to that. So just be aware of it. For me, I think there's a place, there's a right place and a time for a CMHC MLI Select. For myself, it's not a product that I actually utilize very much at all. So,
in my simple mind, the analogy I have for this, because we're talking about, if you're gonna build, then you are at the highest price point. You're brand new. You're gonna be
for
the
sure,
highest price point.
100 price point.
Avoiding it. So the analogy I have for my simple mind is like pre-construction condos in Toronto. They were selling for like $1,600 a square foot.
Jeez.
When resale was selling for $1,400 a square foot. So why would I get into the premium product when the market isn't there?
Totally.
Right. So again, I don't understand this stuff. I'm not involved. It doesn't pass my sniff test.
Totally. As a matter of fact, I share this a lot with my students, is I love seeing a lot of new development projects being built around older inventory. And because what happens is they tend to inflate a lot of the price points, maybe reduce some of the cap rates around me. So what happens is that premium price, and if my product is here, and a lot of people can't maybe not be able to see this, but really what it's doing is it's forcing my property up higher forcing the market up higher because of this variance. So I'm thankful for some of this new development, because it's actually pushing some of the numbers up higher for the average comparables. But be careful. Like I said, I've always struggled with a lot of that new development. And again, this is just me, because you're at the highest price, the highest price point there. And when I see some of these things that are costing, if I use Edmonton as an example, and I'm seeing some of these things being purchased at like $220,000, $240,000, $250,000 a door, where I know in already built, maybe used property, I can be buying at 130, 140, 120 a door. There's lots of room. I can make a lot of money by just buying something older. And at the same time, I can own way more units than that one that is 220, 240 a door. So I'm getting a much more better economy of scale. Where
So sorry, you're saying used is about half the price?
in some cases, yeah, it's dumb. It's just dumbfounding, to be honest with you. Yeah, it's crazy. But you're seeing some of this new development. They are priced at these ridiculous high levels. And I was saying this to you earlier before we hit the record button, is and man, I might get absolutely decimated for this.
Oh
but
yeah,
that's
we're
okay.
gonna get
And we're gonna get hit. But truthfully, it's just like you're hearing from realtors the comments that, hey, people from out of town are willing to pay a higher price for these types of properties. And I think this is where it's important for an investor is you can't compare Toronto apartment building to an apartment building in Edmonton and say, wow, look how much cheaper it is. Always compare what the market is in that area, because you may be overpaying. If you're not paying attention to that, then you're gonna feel some pain. And I think that's exactly what's happening. And I've seen this before. New Brunswick just a few years ago was one of the hottest markets in the country. And we saw people with that same type of mentality saying, hey, look at how much cheaper it is in New Brunswick. I'm just gonna start to buy. And even for one of my properties that I sold out there, I was like, why are people paying this price? This is like ridiculous. It's not even close to the market. But if I'm happy to sell it if you want to sell it, but it was a big question mark why. And that actually was one of the reasons why I was like, well, maybe this is a time to kind of maybe sell some of these other assets right now, because you kind of almost predict possibly what's going to happen in the future as well. You just got to be really, really careful. Now, we didn't see this massive downfall that happened, and we still continue to see investors in these markets and people still willing to pay that higher price. Just remember, when you're comparing, make sure you're comparing apples to apples and not apples to bananas, because an apartment building in Toronto and that price point there is not the same as what you would see like in Saskatoon, hypothetically. They are priced very, very different. And so just understand what your numbers are before you jump in. But sorry, that's a long-winded answer. Yeah, know your numbers, right? So
I have a friend that was recently taken out by a public company, and this is a business, not real estate, but he had previously done 10 acquisitions himself, so he was very well versed with what businesses were worth. And then when he got his offer, he's like, this is ridiculous. I'd never pay this. I guess I'm selling.
Yeah. Well, I'll share a quick one with you too. Actually, it was in 2006, actually. It was an apartment building that I owned in, was it 2006? No, so 2015, and 2015, I think it was. Yeah. And we had an apartment building that was up for sale, or that we were about to put up for sale. And the price point that somebody offered was astronomical, just out of this world that they offered. And their investment strategy was, hey, the market's been appreciating X percent per year for the last 4 or 5 years. Our strategy is that rents will continue to go up. I know we're losing cash flow right now, but we will get that improved by next year. And then the values would also increase by next year. The following year for 2016, for those that are in Alberta, you all know, one of the worst economic recessions that they've had. It was awful. 2016, 2017, awful. And so now the values actually dropped drastically, and rents also went down, and that property just went underwater very quickly, right? So again, you got to be careful. Like, just be aware, do your due diligence, understand your markets, pay attention to what's going on in the market, and just try not to compare it based on your own home province or home city, because it's not the same, especially when you're going internationally or interprovincially, right? So
fascinating. All right, let's go back to AI. Some questions.
Let's go AI.
What's something you're doing now you never thought you'd do 5 years ago?
Yeah. Well, I think, for me, 5 years ago, Savvy Investor is probably the one thing for sure. It's an interesting thing. And I know we're probably going to go down there, but that was kind of during COVID, just after COVID. So we started up as a small little Facebook group, and I've always taught. I've been teaching for about 17 years, but it was mostly just in Vancouver, a small group of individuals. And I think when we started kind of hosting a little meetups just within Vancouver and stuff, and then COVID hit shortly after. It was only supposed to last 2 weeks. I don't know if you remember that. 2 weeks. That's how long COVID was supposed to be, right? And so after 2 weeks, We decided to kind of run a Facebook group, and where we're at today is just under 7,000 members across the country. And, we're trying to build out this platform for our real estate investors to kind of share everybody's journeys and experiences and stuff. So I had no intention of doing this. Just no thought to it whatsoever, and where this kind of came through. And it's been extremely rewarding, and just being able to help support real estate investors, and at the same time, just really connecting people all over the world. It's been really, really fun. I just never realized how impactful a platform like Facebook, like Instagram, YouTube, and then obviously Zoom, because like Zoom is one of our biggest ones, is being able to build relationships all over the world, just based on a common interest with everybody. And so it's been super fun, like really, really fun. And had no intention of this, no intention of kind of growing this to the level that it is. And yeah, just met some incredible people by being part of this. But like for me, it was just a real estate investor. That's really where my focus has been. It still is same principles, but it's just been really cool to kind of see and share a little bit about, yeah, there it is. But it's been really cool to kind of be able to share my journey, but at the same time, providing kind of a platform where others can share their journey to help support each other in our community. And that's something that we've really wanted to instill, is we're not here to promote and sell and pitch and people trying to sell houses or anything like that. We're very open in regards to asking people, share a lot of your experiences, share a lot of your challenges, so other people don't make the same mistakes you did. And that's I'm a big believer that I am. And that's the foundations of Savvy Investors, having a safe place to kind of talk about these things without judgment, and really just being there to support each other. If they've got a question about property management, throw it out there and get the feedback from others in regards to based on their experience or whatever. So it's been pretty fun. Really, really enjoyed it.
And you've been very open with your platform as well. For example, you've invited me to speak a couple times on your both.
Yeah, you did an awesome job.
And while some people consider me a competitor, like you want to be like a community member first.
Yeah, always.
I've been saying that more and more in some business stuff. There's like product or service force.
Yeah.
Where you think like whatever it is that you sell is the best thing possible, versus Cherry and I are very much about what is in the best interest of the customer.
Yeah.
Right? What is in the best interest of the community member. And that's no different why I have people like yourself on the show. Like, like you offer something completely different than I do. I'm just thinking about my friend who, for example, who was on the show, Jennifer, who talks about CME CMLI Select. Again, I'm here to be a buffet for everyone. For somewhat vetted. I've done my best to vet some people. I haven't been perfect. No one's perfect. But again, so people can learn from people who are doing. And then they can take from the buffet whatever they like.
That's the way we've always believed it is. You know what? I'm not the expert of all things, and we were very fortunate to have Erwin share on our last boot camp about international investing and did an amazing job on that. But again, that's not me. I don't invest in the States. And so the more people we can collaborate, the better it supports our community. And the way we look at this too is, and this is the God-given truth. I brought in a lot of people that are competitors in our space constantly. And I don't really look at it as competition. If you resonate more so with Erwin than myself, go work with Erwin. Please do. Like I said, it's not about me. It's not about, and I'll just share it from Erwin's perspective. It's about who you resonate better with and who you feel is going to be able to help support you. And that's why we've opened the doors completely in regards to saying, hey, come on in, share your stuff. And like I said, we're trying to be very, very open in our community space to connect with other industry experts. And like you, we try to vet to the best of our abilities the people that we're bringing into the room as well. Fortunately, I've known Erwin for years and years and years, so it's been like it's an easy one to kind of to reference as a person of credibility. And so we're always happy to have him kind of share in our space too. So.
Yeah. Again, I talked about evolution, but like you and I have been pretty consistent.
Well, it's funny, you know what? You think about some of the people back in the days, is like they've come and gone. A lot of people, it's funny how that happens. And I think for some cases, the reasons have always stayed the same in a lot of ways. Is this over leverage or, ego or whatever the case may be. And I think the biggest thing is they've not really treated this as a business either too, which I think is, that's, I think an important element that a lot of people need to understand. Here we are wanting to learn how to become investors to make a return on investment. But at the same time, understand that what you're investing in is also a business in itself. And you need to also understand entrepreneurship. And it's something that I've been really trying to drum a lot, especially lately, is teaching people that this is entrepreneurship, and it is a skill set that everybody needs to learn in conjunction with learning how to invest in real estate. And because sometimes we get too caught up in the weeds when we get into this real estate investing thing, especially when we start to buy 8, 9, 10 properties. You're self-managing, you're doing the books, you're doing the property management, you're doing all of these things, and you're like, wow, you know what? This freedom, this financial freedom doesn't feel so freaking financially free to me. It's actually more of a tying down. And so, but I think a lot of people lose sight of how to do those types of things. And so I think like podcasts like this and people that you connect with can help kind of provide that support to build properly, scale properly, set up systems, delegation, so you can start to work on freeing your time. So.
Yeah, actually, as you were speaking, I was thinking about people who've come and gone. Like a lot of people that we know from the real estate investment network are still around because they kept things pretty boring and simple.
Boring and simple, yeah.
Like you mentioned, entrepreneurship. Terry and I are working on a new business, and just basic is SWOT analysis: strength, weaknesses, opportunity, threats.
Yeah.
And I'm guessing some people just skip that step.
Here's the thing. I don't think a lot of people, I don't even think a lot of people know what SWOT analysis is. We're saying this now, but that's my point, is I don't think a lot of people even understand what that is, right?
Because I've mentioned this a few times on my show. I learned this when people were going under. How con artist is actually short for a confidence artist. So the challenge is that they're overconfident in themselves. They can't spot their own weaknesses. They drink their own Kool-Aid. They believe their mindset can overcome anything.
Yeah,
right.
Valid.
But your mindset can't overcome a weak balance sheet or a weak cash flow statement.
For sure.
Buy an apartment building, like the rule of thumb that you and I always learned was, or any property really, the first 2 years are a stabilization period.
100%. Right?
And then these people who went on buying sprees, now you got multiples of 2-year stabilization periods. This is going to be your most difficult time.
I agree. Yeah. And I think even part of this too, and I'm sure you've seen this in your past, it's just like, and I'm going to be the first one to admit I was guilty of it as well, is once you've got a system, an acquisition system where it's like rinse and repeat, finding money partners, and you're buying and buying and buying and being rewarded, and I'm going to be really careful here, but being rewarded for acquiring more doors or more properties for specific reference or recognition, I guess I would say. Sometimes that's where mistakes got in play happened as well, is ego got in the way. And I know when I was in my ego state for probably 2 years, and I've shared this a few times, I was buying 2, 3, 4 properties a month for probably 18 months. It was insane. So literally, I might as well have had an office at the lawyer's office. It was just like boom, boom, boom. And because I felt it was very cookie cutter approach, there was a lot of mistakes because it wasn't. There was still things that I missed out on simple principles. Like, even back then when I was buying townhomes, my principal was buying 3-bedroom townhomes with 2 baths and a finished basement suite. Accidentally, I bought 3 bedrooms with 1 bathroom, no basement suite, right? So now all of a sudden rent's gone down. And like just simple things that got caught up, not buying in the right market, right community. I was just on the fringe of picking the wrong spot, but ego got in the way there. And I think for a lot of people get caught up with the doors. I want to buy as many doors. I want to buy 3,000 doors. And I always challenge them, like, why the hell do you want 3,000 doors? Like, that is a lot of doors. Like, that's a lot to undertake. And I guess, do you have the systems and backup to support all of those types of things? And why do you need it? Can you do it with 100 doors? Cannot achieve? And even for myself, part of my strategy even right now is I'm divesting some of my assets as well. I had a couple dogs that I had to sell, and I'm just like, thank God, it's just a monkey off the back because we've been able to recover, do well, take our money off the table a little bit, and move that to some other projects in the future as well, right? And so that's just part of the business, and that's part of the system. And so what you're trying to do is streamline to be as effective as you possibly can. But now that I've been doing it for 24 years, and I'm sure you can appreciate this too, is for me, the income side is one thing. That was always a big focus for me right now. It's always about getting my time back. How do I get more time back? And that's been main principle, period. I want to spend as much time doing the things that I really, really enjoy.
Right, which is not being a developer then.
I don't
Not
want to be
poo-pooing on
a developer.
developers.
I'm the first one to do it. Yeah.
We absolutely need the developers. We need the supply. Thank
Yep.
you all.
Thank you. Appreciate
Thank
that.
you.
Yeah.
And
Like for me,
society should thank you.
yes, for sure. And like even for me, it's like, would I be the developer? No. Would I invest maybe in a development? Maybe, right? But I do not want to be the working partner in that aspect, right? So maybe.
Right. It's like
So don't start calling me now and saying, hey, Mike, I got a project for you, right? So I'm just joking. You can call me. It's okay.
you know, I feel like, at least like restaurateurs, like, thank you. I'm happy
Yes.
to pay for my meal. I could never do your
Thank
job.
you.
Thank you,
Seriously.
developers. Thank you, developers.
Yeah.
Like, it's not my appetite.
Yeah, I agree.
So
Go ahead.
you mentioned you sold some dogs. So we're in a period of time lots of people are looking to be selling. It just seems
Yep.
that my so what I hear from the community is many people are looking to sell. Again, I'm in Ontario. It's different. every
Yeah,
every
for
market's
sure.
different.
Yeah.
But what was the reason you just how did you identify an asset you did not know you no longer wanted to sell?
Yeah, like I think like there's been a couple instances where things kind of changed. So one property that I owned specifically was an apartment building, and for those that are in Edmonton, they can appreciate this. Near the new Edmonton Oilers ice arena by Grant MacEwan University there. That was like, I don't know if you've ever seen the new Edmonton Oilers ice arena. That whole ice district thing is wicked amazing, right? And so all of these, but based on the location, you're just a few blocks from some of the worst areas in Edmonton as well, right? And so anyway, we bought this property before that arena or the ice district was being built because we felt that, hey, there's all this development that was going to be occurring. It's going to be revitalizing the market as well. And so we were pretty bullish. What happened over the last probably 4, 5, 6 years, probably 5 years, we saw actually a significant change in the negative way in regards to tenant profiles. So a lot more homelessness and a lot more drugs, a lot more of this started to kind of move in. And even though that property was performing very, very well at its initial stages, it changed quite drastically. When I say drastically, it was 3 or 4 years. And so nobody was really wanting to rent in that area, and rightfully so. We saw crime going up. We saw people trying to break into our building. We had more security, and we had a lot more people dumping stuff in our dumpsters. And so the cost started to go up and up and up, and the demand for that particular area started to go down. And so this is kind of just one of the things that we say is if we saw some changes that maybe the property is not performing as it once was before, and we've generated some equity, maybe it's time to take the money off the table and put it to something a little bit better. And as I kind of shared with you guys earlier and I'm being the first one to kind of admit that, there's mistakes that were made. And so sometimes you bought in a location that you felt was going to be great and it just really, really wasn't. And so you did the best you possibly can to make it work. But if you're putting all this, you got to ask yourself, where's your 80%, your 80-20 rule? If you look at all your properties, which property is taking up 80% of your time or is 80% of your headache? And then all of a sudden you remove that one, boy, is that a great time back in your life to focus on bigger and better things. And that's one of the things that I pay attention to. So there's a lot of reasons for it. It's just in some cases, in most cases, changes in demographics when it comes to tenants in an area. And sometimes these things are not expected. Maybe the property is not performing. in a specific way, or the costs have just gone a little bit higher than what you anticipated, and it's just not really providing the same returns that you were hoping for, and it's just taking way more time and energy, and pulling back. And I think that's where everybody should take some time and just say, I'm needing to review my portfolio and be honest with yourself. Look at your top, or look at your bottom 2 or 3 properties that are performing at its maybe lowest point in your entire portfolio, and ask yourself, what would your life look like if you took that off the table and put it towards something a little bit more positive? And I think everybody's had a dog. I would imagine you have as well. I've had a few dogs myself, and I'll tell you, that feeling of just letting that go has been fantastic, just to get rid of it, because now your overall portfolio is much more, is performing much better. Your headaches start to go away, and that's something that everybody should kind of be pruning the bushes a little bit from time to time as you continue to scale and grow.
I can't wait to get rid of my tenant-friendly portfolio.
I've heard that a few times, actually, not just from you.
For me, I'm always on your Facebook group. Actually, I commented on one of your surveys about people and like all these cranky people want to sell. Like, yeah, like, Michael, how many of these people who are not happy are from tenant-friendly provinces?
I won't make those comments. I'll let them put it in the comments if they like, right? So that's funny. Oh,
so let's talk about the conference. Let's talk about the Savvy Investor Summit. And again, it's free.
Free! What a concept, right? Yeah.
Hey, wait, and you're putting up a lot of effort to make this happen.
Yeah, we're trying a different experience this time, actually, too. So for those that want to check it out, yeah, it's cool. Savvy Investor Summit is going to be taking place on September 13th and 14th, 2025, for those that are listening. It's a 2-day conference. We've actually hired a production company in Ontario, of all places, to help facilitate this. It's actually going to have an exhibitor hall, so you guys can check out different exhibitors that are going to be part of this as well. There's a big speed networking event as well, so you can be connecting with investors literally across the country. And this gets really, really cool for everybody who want to check this out. You start to put into your profile what your skill sets are. What are you, a multifamily investor? Are you a single family investor? Here, you're a developer. Here you go. Or when you're a developer, okay, and you want to connect with other developers, or you want to connect with other money partners, or you want to connect with it. You start to actually add that in your profile. And as soon as you press the button, it will actually connect you with other people in the space for what you're kind of looking for to make those connections. And so it's kind of like speed dating, and maybe it is speed dating. You never know what happens, right? But truthfully, we're trying to connect our community together for people that have commonalities. Maybe they are looking for each other. Maybe you are looking for a developer. Maybe you're looking for a property manager. And we're trying to bring these individuals together in one space. So we have some incredible speakers joining us. Some very unique keynote speakers that are joining us too as well. Some are brand spanking new to our Canadian community. Trixie Castro, who is a very seasoned multifamily investor and entrepreneur. She sold her business for hundreds of millions of dollars. And she's sharing a little bit about her experience, and it's just fantastic. Tiffany High, who is also from the US as well. Again, very, very recognized on social media, but again, mostly focused on multifamily, and she's going to be sharing a lot of her experiences based on the good, the bad, and the ugly. And Chris Smith, this is a great story too, and he's one of our keynote speakers. He's kind of dead center, just shortly behind me in the image. And Chris Smith actually he's actually went under twice during COVID. Or during the 2008 recession. And it's really about mindset and rebuilding themselves. And so and the reason why we wanted to kind of bring him on is it is about resilience, because we felt that there's a lot of people struggling right now in their real estate space. And, we talk about private lending, we talk about their portfolio not performing well. How did he overcome some of that? And hopefully that story resonates with all of you. And so this summit is going to be a little bit different. We're not teaching people strategies as we are teaching the business of real estate investing. So a lot of the back of the house stuff, systemizations, delegations, structure, managing tenants. We talk about tenant issues as well. And so we've got a lot of individuals. We've got Mackenzie Wilson from Single Key going to be joining us as well. We've got Kayla, who's going to be joining us from Ontario Landlord Watch, which I'm sure you're familiar with as well. But again, we're talking about lots of different aspects. We've got Graham Barr and Brandon LLP just talking about safeguards for real estate investors when it comes to contracts, even purchase agreements. People that are not really paying attention to this is when you're drafting up your purchase agreement, have you put the right elements in place? Because there's a lot of mistakes that tend to happen as well with that. So there's a lot of great presenters talking about a multitude of different topics, but it really is there to support the investors. And we're doing this for free. It costs you absolutely nothing. You can be in your pajamas and watch this for 2 days if you want. But I promise you're going to have a lot of fun. You're going to learn a ton with some just incredible speakers. And the best part, just to have a little bit more fun with this, we're also going to be giving away over $10,000 worth of prizes, which includes a Caribbean cruise for 2. That's going to be taking place in February to be part of another conference, which is REI at Sea, which I was part of last year, which was fantastic. And we thought we'd do that as a donation or a prize to this. And we're doing this in a really fun way that we're calling the Savvy Games, where you're collecting points throughout the event, pre the event, and the more points you collect, the more you move up your leaderboard, the better chances you have to win. And we are awarding it at this event. We had the first phase of this at boot camp, which you were part of, Erwin. This is the second one and the final finale. So come out. Have a lot of fun. Tickets are free, folks. You can't beat the price. And at the end of the day, promise you guys will have an experience, a virtual experience like you've never seen before. We've put a lot of energy and effort into this. And the speakers are really, really amazing that I know will help support you in your guys' real estate investing journey, regardless if you're starting or you've been in it for a long time. There will be tons of lessons to be learned from this. So
I love the idea that you have some, not the idea, but I love the fact that you have some speakers who've failed and come back. And I haven't said it enough on this show, but I've said this in private to friends. Like anyone who went under, like during previous times or current times, like likely they're pretty talented to get where they are, and you know, they'll live, they'll learn, and and they can come back, right?
Yeah.
Probably even better and stronger.
Well, those are the inspiring stories. And we've had people like that too as well join us. There's a gentleman that we had in one of our boot camps, Marcus Collis. And kudos to Marcus if you're listening to this. But he built a company called Magnum Nutraceuticals. He had nothing to do with real estate, as a matter of fact. And he almost went under during COVID, like just a few years ago. And he was one of the most successful nutraceutical companies with like protein powders and all this stuff like that. And you want to talk about ripped, you should go check him out. But honestly, just amazing guy. But he literally almost went under. Like it was awful, awful, awful. He built his company from a garage. It was really, really intense. And to have him have almost everything just disappear was shocking. But then he had to rebuild over the last few years. And he sold his company for just roughly almost $500 million. $500 million. So he shared that. He shared the ups and downs. Like that's such an astronomical number. Like it's something that, you know, I hope that we both succeed at some point in time, Erwin. But honestly, to hear the challenges and obstacles and the mindset and the challenges that come along with this, it's the same ones that you and I have based on losing $10,000. His numbers were actually significantly higher and extremely devastating. But he was able to get that mindset change, and he shared his lessons to help overcome that. And you're going to see a lot of speakers at Savvy Investor Summit sharing a lot of their journey as well, the good, the bad, and the ugly. So you guys as investors can be supported regardless of where you are, the challenges you're facing, whatever aspect, wherever you are in your real estate investing journey, starting, seasoned, or you are at that expert level. There are people that you will resonate with there as an entrepreneur, real estate investor, or wanting to be a real estate investor entrepreneur.
That was pretty awesome. Hey, you left out one thing. Where can people get more information?
Oh, very good. Yeah. So go to the Savvy Investor website, thesavvyinvestor.ca website. Register accordingly now. Tickets are 80% sold out. You can get your tickets there and register accordingly. And like I said, we're expecting this to be a really, really great event, and we want this to support our community. This is our largest event of the year, and we are looking to host this every September around the same time with Summit, and just continuing to grow bigger and better. So you'll see kind of the drop down menu there. Yes, if you see it there, you'll see, if you just scroll down a little bit, you will see the register right there. There you go. Perfect. And then you'll
for those on the YouTube, for the listeners' benefit, it's literally thesavvyinvestor.ca. It's on the right side.
Yeah.
Easy to find. Register for free.
Yeah, you'll see the pop-up kind of appear. Yeah, you'll see the pop-up appear and just register accordingly, and then you'll see all the speakers, the content, topics that we're going to be presenting in. But like I said, it's going to be a really, really fun event, especially with the exhibitor hall that we've put into place. So we want you guys to connect with industry experts. We want you to also network with each other. We felt that was extremely important, where you guys can meet with people that you've never ever met before. And at the same time, connecting with people on specific topics that are of interest to you, or you're looking for something specific. We've set this up in a way where you just put your common interests there, and you will connect with those people automatically. It's going to be pretty fun.
Amazing. Yeah, so thesavvyinvestor.ca speaker bios are all up there as well, so you can see so anyone can go see what they'll be getting, or why they should be attending, what it is. If they're looking for anything specific, they'll find the subject there.
Everything's there. Yeah. And at the same time, you have to also take a look, and you know what? There's prizes too. It's a cruise, man. Come hang out with me. Like I said, I'm going to be there in February. It's an 8-day cruise for 2, all paid for by us, just by attending. You get free tickets and a chance, and you get to we're gamifying this as well, just to have a little bit of fun, because I like having fun. But like I said, it's going to be a great experience. And like I said, you will connect with some amazing attendees and speakers. Erwin was our speaker last time. We had a great event. Very, very thankful for Erwin. And we are looking to level it up big time for this one here. So
amazing.
Yeah.
All right, Michael, thank you so much for doing this. Folks,
appreciate it. Thank you.
thesavvyinvestor.ca.
Great. Thank you. Appreciate it.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover, or there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this has arrived on. I'm not hard to find. We're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.